Today, let's kick off with a bad experience that Rizwan had yesterday with a startup that was pitching for funds. So, Rizwan, over to you.
Right. Thank you, Mursab. So I think we'll start with that experience. So, of course, I'm not going to name names, but because it was yesterday, maybe they will realize who it is. But it is not criticism. This is more of to identify how you should not be speaking to, investors or representative of investors, because once you've gotten the chance to meet, you should have a plan of how the meeting should go, right? Um, so yesterday's experience was a classic example. So there were a bunch of young guys who've set up a investment finance firm or something, and they've given them really fancy titles to themselves. So apparently these were the guys introducing us to the founder. Now there was a lot of lack of preparation. The product was good. They were making good money. So one of the key things was whenever there was a question asked, there was a simple yes and no answer, but that's not what we delivered. Just to give you an example, like it's a very common question I can ask: is your process or your technology is it proprietary or not? Right? It's as simple as saying yes it is or no it's not. But sometimes what happens is you'd get an answer where the someone from the other side, either the advisor or the technology person themselves, they might start not answering the question, and also like it sounds like they're wasting your time. They're not doing it intentionally. I do not have anything against this. This is all for the purpose of education, right? So an answer like this, I'm sure you would understand why it would annoy anyone who's actually trying to seriously evaluate a situation. Oh, well, I don't think IP is important because you need a lot of money to get a patent and then to defend it, and then you have to pay lawyers. So I think it's a better strategy just to defeat your competitors, right? Does that sound like a...
So yeah,
Would you take that answer in a marketing team meeting?
that would lead to a lot of questions.
Exactly. So you have to pay attention to what is being asked, right? No one is there criticizing you. They are basically looking for a simple checklist, right? And then when you're not prepared, it's the best thing to do is to not present. It's to delay the meeting, because once they have said they want to have a meeting, they're not going to walk away from arranging at a different time. So, another example is a lot of people present their ideas, but they do not present their competitive advantage and the overall competitive landscape. For example, let's say you have a logistics business that you're working on and you're doing B2B, right? A lot of people are good at identifying the big names, right? But people forget there are startups, there are indirect competition, there are businesses in that industry with enough amount of money to come and build up the operations you built in over like 3 years and maybe a period of 3 months, right? And then a lot of times you start asking founders, have you thought about this? Have you thought about this? There's a lot of defensive attitude where they think, you're kind of talking them down.
You're attacking them.
Yeah, but the whole point of that discussion, by the way, is we are trying to understand the business better. And even if we don't invest, we're hoping that whatever questions we've asked will make their business pitch stronger. And another thing is, I'll say this. I mean, I say this to startups most of the time. Do not appoint an advisor. Appoint someone who's more of a mentor. Because what happens is whenever an advisor tries to pitch for a startup, especially a startup, it can work for a bigger company in PE. What happens is you will, the first thing that the investors will look at is like, okay, this person's not good at raising money. What I mean by get a mentor will be your advisor, right? If you cannot do good financial statements, get a I would say consultant. Don't call them advisors, because when it comes to advisors, right, they try to lead the whole thing. They try to tell you they try to answer questions on your behalf.
They have the advisor title, so they must-
Yeah, I know. But I mean, in my experience, I mean, have a consultant who can do a good IM, start a pitch deck, a financial statement forecast, you know, all that is fine. Even get someone to do your business analysis, that is fine. I mean, I would just get a consultant, not someone who will literally take over your fundraising process. Because as an entrepreneur, that is something that you have to do. I see a lot of people who are like, who sometimes even come up to me, say, hey, you know, introduce us to Fulan person, take commission. Like, I am not in that business. I'll introduce you anyways, right? But do not try to, you know, send someone else to do your job. Unless if it's one of your investors already who's working with you, or someone who's maybe invested expertise into your business, or it's better to have them on the board of advisors instead of that one advisor who's talking to, because a lot of times, and make sure that person is experienced, because sometimes you will have a really great business, but the middleman will present it in such a lousy format or way that I think it just destroys value for you. And there are some I would say, you know, professional investors who can see away from this sometimes. For example, I liked the business yesterday, so instead of saying no to them or, you know, getting too frustrated, I simply asked them to add more information and present it to me again. So I mean, that sort of covers the summary of what not to do. And I mean, we can go in a lot more detail. Is there anything that's
Well, I mean, a few learnings that I'm taking away from this, and this is something I've observed as well. People get defensive very quickly, and they feel like, you know, they're being attacked, but it's not an attack. If you're being attacked, you'll know it.
Yep.
99% of questions that make people defensive
Yep.
are not designed to make them defensive. It's
Exactly.
you, it's not them.
Mm-hmm.
You're becoming defensive
Yep.
because of a perceived gap in your thought process or in your pitch deck or something else. So whenever you're pitching, defensiveness is something you should leave at home.
Yeah.
You should be prepared for all kinds of feedback.
Hmm.
You know, even harsh feedback, because that feedback will make you better and stronger for the next pitch.
Exactly. Yeah.
The second thing I think I'm taking away from this is that people get really invested in the pitch process.
Hmm.
And they say, well, yeah, this is it. If I don't succeed this time, I'm dead.
Yep.
But it's not. It's no one pitch is an end result, leads to an end result.
Mm-hmm.
It's a process. The first time you meet Rizwan or anyone else, it will be your first meeting.
Yep.
If you screw it up, it may be your last meeting with Rizwan.
Yeah.
But it won't be your only meeting, because Rizwan is not sitting there with a checkbook.
Yep.
And he's so wowed by your face and your presentation that he goes, here's a check. I don't
Exactly.
need a contract. I don't need to do any due diligence. It's not like that.
Yeah.
You have to be prepared to invest time with purpose in that relationship.
Yeah. Exactly. Yep.
And I don't see that.
Yep.
I mean, I see it as, you know, here we are, give us money. Right? You know, this is it.
Exactly. Yeah.
इसके आगे कोई बात नहीं.
True. I think we touched this topic very slightly last time. Give yourself time to raise money. वो जो अपने बात की थी, talk to
Yeah.
100, get 100 yeses or nos, and then 100 no's and then maybe a yes.
Then maybe.
Yeah, but उसके साथ a lot of things that do not. So for example, होता क्या है? I meet someone and I say, okay, this sounds interesting, right? Then I ask for further details. I get further details, but then I have follow-ups that are too quick, where sometimes I have to be like, can I please ask you to let me complete my process? Because you have to know that for example, I have 18 deals right now. I have to do 4 to 6 presentations to my board to why I think those are good investments in the next 4 weeks, right? So that's a lot of analysis. So sometimes when I ask people to wait, they keep like, I mean, there are people who do it subtle, like where they'll keep sharing a little bit of updates about themselves and all that. Like last time I was saying, I don't think that always helps, right? Because once you're in the process, you will get an answer, right? And I mean, a lot of times people also get bothered where you ask them a couple questions where you're basically like, can I have this more information? Can I have this? And again, people are like, oh, we'll have to do more work. We'll have to do this. The thing is, if you're not willing to do the work, why would someone presenting your opportunity to the investor would invest time in your deal? The other thing is, never lie about other people who are ready to give you money. Or even if someone is ready to give you money.
Creating FOMO.
Creating FOMO, exactly, yeah. And yeah, I have had this instances where I speak to someone who's like, oh, abhi to main America se hoke aaya hoon, 3-4 log to, you know, they're like, we're in the talks. Or I mean, most people can see through that, you know. It's like if you were in the talks with someone, you would just
people just disregard.
Yeah, exactly.
चलो ये तो fluff हो गया, चलो अब काम की बात.
No, actually, in my case, I just stopped talking to them.
Really?
I was like, all right, if you have someone, then why would I? Because we're not in the business to compete with someone else's investment, right? And then you meet the same founder like 2-3 months after, or sometimes to speed up the process, they would give you a call. They're like, oh, you know, there's this VC they've sent us a message and they want to meet, and we just say, okay, well, go meet them. So like, do not try to speed up the process. I mean, if you are really pressed for money at that time, it's probably a bad time for you to raise money, to be very honest. It's
People don't realize.
Yeah, it's probably you have to figure out your you know, your room for breathing yourself and letting others breathe. Because you have to realize whenever you build that kind of pressure, even psychologically, it creates a lot of negativity. You're already in stress. You're passing on your stress to someone who is looking at potentially partnering with you. And no one wants to be doing business in that kind of an atmosphere. You know, people want to be excited. People want to be inspired. People want to be, you know, feeling like it's going to be a team. Again, the next big thing. And, you know, this is going to create impact. So when you start throwing all those other signs, it becomes very bad for business. Another thing I think, another experience I just remembered is when I sometimes sit down with founders and, you know, they will present me with something and I ask them for a financial model. They'll be like, well, you know, my team will put in a lot of time in that. And I'm like, okay, yeah, but so is there any surety of investment? I was like, then I sit down and try to explain to them, I cannot even confirm my interest without looking at a financial model, right? I mean, interest, by the way, you have to realize interest does not mean you're getting an investment. Interest means you're in the process of further evaluation. So there's a lot of confusion in that. And I mean, to me, it sometimes feel like some people come across as, you know, they're not really concerned about getting the funding. It's like, yeah, we'll see if we get one, we'll get it. That attitude is not gonna get you funding if you're seriously looking for funding, right? Where people try to be like, oh, our business is so good, we're gonna get funding anyways. Yeah, we're gonna get funding. Sometimes, this is very common. We are bootstrapped and we don't need money, but you know, but we would prefer money because, so like, don't do that. Just be straightforward. Yes, we want money, and this is why exactly. Just don't try to make it complex, complicated. Do not make it a political game. Do not make it an emotional game, because in the end, you'll tire yourself out. And before you get tire yourself out, I think anyone you're speaking to would probably be like, okay, I don't want to put my time in this. Right? And I'll give you an example. One of the startups that I know, I have sent their pitch deck to an angel investor that I know, and I know that he's traveling. And I know him really well. Whenever he finishes his travels, he will definitely get back to me. I don't have to follow up because I've known him for some time. And this is a good example. And this startup really understands that, right? They do not text me every 2 days asking, oh, is there a reply? Because I was like, hey, when I get the reply, I'll definitely, you know,
The first
I mean, you know, there's no reason for me to hide that. So yeah, I mean, I think we can now move on to some good experiences as well.
Just on the follow-up thing.
Yeah.
I've been on the other side of the pitching table as well, as you know.
Yep.
Whenever I'm pitching with someone, they, like 2 days later or a day later, they will come back and say, follow-up करने? Should I send a follow-up? My answer is almost inevitably no. Please don't do that, because you've just pitched them something. They are not sitting there only working on your deck.
Yep.
They have a life. They have a pipeline.
Yeah.
They have prospects. They have things that, there are a dozen things they're doing that don't include you.
Yeah.
You're following up with them just reeks of desperation.
Exactly. Yeah.
So here's what I recommend to people who are trying to follow up without following up.
Yeah.
Right?
Mm-hmm.
So there are two things. One is branding, and the other one is activity.
Right.
And this is straight from my BC lab induction process that's
Yeah.
going on right now. So branding is basically you create an aura around yourself that comes across in different ways, right? So for example, you get tagged in social media posts by 10 other people. You don't tag yourself, because that's just bad luck, right? Tagging yourself in a... By the way, how many people here have done that? Like tag yourself in a post of your own?
Oh no,
Not in your own post.
Yeah, not.
In other people's
I thought,
posts.
yeah.
नहीं, अपने post को तो आप नहीं tag करेंगे.
Exactly. Yeah.
That's just bad form.
Look, I thought that I saw you were asking the other question.
No.
I get it now. Right.
So when someone sees you being tagged in different people's posts, your brand retains what we call top of mind awareness. So you don't then need to remind him of anything. He's already aware कि हाँ यार उमर ने मुझे आके कुछ पेश किया था उस दिन.
बिल्कुल.
And I have to get back. The second thing is activity level. Activity level means what? It doesn't mean following up on anything. What it means is doing events, going places, meeting people, conducting interviews.
Exactly.
Creating an activity level around yourself that leads to a reminder of your business with that person. Because most people that are reaching out to me nowadays, because of this activity level, यार उमर आदमी कहीं ना कहीं से मेरे फील्ड में आ जाता है. I may as well go and talk to him. Right? Because it's not like I'm reaching out to them.
Yep.
It's the other way around, and that is what you want.
Yep.
When you're fundraising, it becomes even more important.
True.
Rather than sending them tidbits, let them see what's happening in your world.
Exactly. Yeah.
Without meaning to show them, like, it's not for you. This is what I'm doing. This is what my life is. So if you'd like to be a part of this,
Yeah.
then
Exactly. This is one of the reasons I love talking with Umar Bhai, because the things that I sometimes see lacking in our environment, maybe in this country, I always see him either practicing or talking about it. So one of the things, a lot of people, when they come to me when they're planning to have a startup or they're leaving their careers to become consultants, right? They have a lot of they're quite bent on marketing themselves, where they will talk about themselves. They will tell others, oh, that person, he said this about me. But one thing I've learned, and I would say one thing that has also led me to what I do now, is I learned this from someone pretty quickly, that the best level of marketing is when others start marketing you, right? So for example, I've never told any of you that I'm a financial expert, but you'll believe it because you've seen posts about it if you're on my social media. Actually, one of the first investors that I worked with.
We're part of creating that legend.
Yeah, there. See, so one of the first investors I'd say I met was through this kind of a process. So basically, I had this friend. This is a very small example of when I was starting my career, right? But that's how it led me to that understanding. So I was not even a complete chartered accountant by then. I was just doing my exams in London. I had this friend, and he used to work. So his dad had a business where they basically provide cars and flats to these rich Arab princes. So and some billionaires as well, right? So like Arab billionaires and all that. So they would travel, and he would sometimes, meet them. So he was sitting at some place, and one guy was looking to invest in a pharmaceutical in Africa. So my friend, I don't know why, but he goes, "Yeah, I had helped my friend out with some financial stuff for his business at some point, and he was sitting down with this billionaire guy. He's like, I know the guy who can help you with this, right? He sold me so well that when I went ahead and met those people, they were like, yeah, they didn't ask me what my education is. They didn't ask me if I have any experience. They were just so sold on my friend selling. But I did follow up on one thing. They sent me a set of financials. They're like, get your guy to do a analysis of this, right? And once that opportunity came through, I was like, okay, this is, I have to do something with this. So that's how my career basically initiated. And I think, besides saying that's a good marketing strategy for yourself, around you, if you have good people, I think this is the best sort of contribution you can do to their success. Because, if you see someone with great talent, a great product, become their advocate as well. Because whoever you're introducing them to, it's not like, there's this fear in our mind where the people go, oh, this guy is gonna cut me out of the way. He doesn't want me to business kar rahe. It's fine. Don't be that commission eating agent everywhere, because I think that kind of a ecosystem actually develops faster. And yeah, so the takeaway from that is, instead of marketing yourself, I wouldn't say get other people to market you. Do something great that people will talk about.
And people want to engage with.
Yeah, exactly.
All right, so I have a question, because this is something that I get asked at least 5, 7, sometimes 10 times a day, and I'm sure you do it. Please help me raise funds. This is the question. The people that are here have the same question in their minds as well. People who are watching online have the same question. The first part of that question that I have for you is fundraising right for every startup?
Actually, no, it's not right for every startup. Because first of all, the definition of startup is not very clear. But in my mind, I have a clear one. I think I shared that. A business that can grow 400% in the first year or more. And then for the first 5 years, it does not drop down anywhere below 120%, right? Now, that is not a definite, definition. But the thing is, sometimes there are businesses that you start, and you can actually see it's very easy to make money, and they can scale slowly. Now, over there, it'd be a question of where should they be raising money, because you see, a lot of times, one of the key things that also we drop businesses out of our pipeline is when we actually look at the business and we ask them, why are you raising funds, right? A lot of times, okay, so I think everyone should know this. A lot of this, the answer is like, oh, because we want to market more. I mean, I'll ask you a question now. I mean, because you've been on the marketing fronts. Is money all that you need for marketing?
Money doesn't hurt.
Yeah.
But the reason you're spending money is either customer acquisition, customer retention.
Exactly.
You have a particular proposition that you want to put across.
Yep.
You're trying to create brand awareness. There
Yep.
are rational reasons to spend the money. Generally saying that I just want to do more marketing.
Exactly. This is what an investor wants to hear. They want to hear the channels you're talking about. Why those channels? Have you already got the eyes of those customers locked on you? Because then marketing becomes the biggest investment. We love investing where the money is only needed for marketing because we know it's instant returns. But just saying, oh, we're just going to market more. It just makes no sense.
No, it tells the investor that you haven't thought it through.
Exactly.
You're going to
And
spend $1 million, but you don't know really what you're going to do with it.
and the next question would be, okay, after your marketing, you get sales. How are you going to build the infrastructure? For example, a lot of technology, software, SaaS businesses or product-led businesses, when they pitch to me, I see that they need money for getting more business, but then they have no plans for, okay, for example, someone has 3 products. I know not one product team cannot handle 3 products. Impossible, right? Then I started asking them questions like, are you going to have a product manager? How many product managers you're going to have? For example, if one product has like 3 interfaces, one on the consumer side, one on the commercial side, one on the operational side, you need 3 different product managers. So instead of the investor answering these questions for you, you should have thought this out, because it's easy. Everyone knows you need money for marketing, but the scaling is a different part. Especially, so let's say, let's walk through an example. Let's say I'm in the business of selling tea online, right? And I spend a lot of money on marketing. Sales start coming in, but I don't have any distribution channels that are expanding as much as my marketing expenditure is.
From Lahore, but
I cannot fulfill them, right? Right. And let's say, okay, fine. I have the distribution points, right? But I spend so much on marketing that I have orders beyond my procurement or manufacturing capacity. What do I do then? So when it comes to startups and investments and growing business, it's about the overall scalability. How you have one way I like to see it is I call it unit analysis of every sale. So like you were mentioning, unit economics, exactly. So how much is it going to cost you to get the next customer? How much is that customer going to pay you? How many more resources, for example, office space, staff, anything you need to fulfill that requirement? For a startup, I think little explanation that should help who are listening is, so when you start, for the first few years, it's okay to make less money on every unit and spend more to acquire them. But somewhere around the 3rd year, 4th year, your acquisition cost should be decreasing and your revenue per unit should be increasing. That's how you basically startups. By the way, that is a challenge Uber is having right now in the capital markets. So if anyone has a good ride logistics idea, I would say seriously, don't do your startup. Send an email to Uber. I'm not joking. They're looking for a escape. I'm just I'm serious. Yeah, because you see, this is something that has come to light in the investment world recently. Because see, the investment world also, you have to understand, which is how I think a lot of startups also be like, okay, I'm going to be in that business because there's lots of news about that business, right? For example, you hear about logistics. Everyone will learn after logistics. A lot of investors as well. But the thing is, do not be the one following the popular opinion without really having a passion or knowing what the problem is, right? So even when you're identifying a problem, by the way, I would say, I see when I look at a presentation, they're like, this is a problem, I'm solving it. I think we can also go beyond those statements, where we can convert those into unit metrics in the economy. For example, I was talking to Karvan over there, and there was like, oh, X company spends this much to fulfill this. I want to bring that to cost you that much. That problem and proposed solution sounds much more exciting, where you know the results. So I think when it comes to fundraising or not, you have to go through, are you actually matching the growth prospects? Not just that you can market, of course anyone can market, but does your business have that scalability? Is it different? And actually, if you go into other markets like the US and and United Kingdom. There are a lot of venture studios, investment clubs. They now have licenses from the government to evaluate a business on how unique it is. So the reason they have that is because they are now giving visas to, businesses who are truly different, and that's one of the requirements. The business has to be something that is not happening in the country already, or it has to be doing something in a different way. And I don't know how much they charge for this. I think it's cheap. Some of them might even be free. So you can always just test your idea and then figure out if you deserve funding or if you should be raising funding.
So, risk of promoting something that we're doing at Contact,
Yeah.
we actually have an immigration vertical called Wonder,
Okay.
and it's meant for startups that wish to pursue life outside of Pakistan as well. So we're matching their personal goals with their professional goals.
Nice.
And so we work with them to do the whole business plan. We get them the LOIs that they need from incubators as well as from ABC
Okay.
in Canada, for example.
Nice.
And then we help them through that entire process to the point where they land in Canada. If they lack investment, because it's not, you need to show about $200,000.
Yeah, exactly.
Then what we do is we pair them with investors who are also looking for Canadian residency.
Nice.
So we bring an investor onto their official co-founding committee. So that investor takes, let's say, 10% of the business for $200,000. Now that $200,000 is in the kitty and is now available to show the Canadian government. As these guys will not need support from anyone for the next 1 year.
And by the way, this is a very, very good option for a lot of startups, because a lot of these companies who are evaluating these applicants, they get paid by the government, right? So you can actually get funding through this too, by the way, because most of these incubators or investment clubs, as they call them, are very big ecosystems, and that's why they're licensed by the government to evaluate these opportunities. And and if you want to connect with them, talk to Umar Sabi here, right here with you all the time.
We're actually doing a beta test right now.
Oh, nice.
People who are going through the process.
Brilliant.
So
we can do this for England as well, by the way.
No, I just want to make sure that the concept works.
Yeah, of course,
it's scalable to any country that has a
Exactly.
Visa program. Right?
Exactly. Yeah.
Australia, the UK, parts of the EU, as well as the US.
Germany, I believe, to some extent, yeah. So
there's a lot of opportunities in this, and given the fact that if you apply for a Canadian regular immigration visa, the minute you cross 40, you're no longer eligible anymore. So you can't, because you just don't have enough points. And there are a lot of people in developing markets that have money, but no way to actually apply for a permanent residency anywhere else. This is good for the startup, it's good for the founders of the startup, and it's good for Pakistan in general to be able to show that we are expanding organically into markets that support that kind of expansion.
Yep. I just had a random idea in my head, right? How many startups do we have here?
170 over the last 3 years.
170. No, how many active ones right now?
About 70? Cohort 6 and
How about we do a challenge and see which one can gather information of 100 potential investors first?
We're here?
Yeah.
We have that list.
No, the startups do it.
Say what? Explain now.
So basically, I know NIC has that connection list, right?
Yeah.
But I was just thinking, because we're having the sessions and we want these startups to be raising money better. Have they ever gone through an exercise of gathering these kind of data for themselves?
I don't know the answer to that, but I do know that every quarter or so we do an investment roundtable.
Oh yeah, I've been part of that too. Yeah.
I know. So we bring in 14, 15, whatever investors from all over the world, and we put the last time we had something like 30 startups that were pitching. So in the span of 3 hours, we had almost 100 pitches done.
Oh yeah.
In front of these 14 VCs, and so what we do is, even before the event, we send the VCs 1-page.
Yep, exactly. Yeah, you ask them which ones you want to meet. Yeah.
The VC says, "Oh, I want to meet these guys and these guys." So what we then do is on the day we create rooms in Zoom. Each VC has their own room, and one startup goes in and they get 20 minutes to pitch to the VC.
That's brilliant. So basically, that was just a thought in my head because
Yeah.
you already have basically the platform to meet all the investors. Now it's up to the startups to be able to follow the guidelines we're sharing. Now, I think we were slowly moving towards, I was saying, let's move to some good examples, right? One of the startups that I recently met, right? They have a platform business. They had the product ready. We met them first on a call. They explained the business. We said, all right, please send us your pitch deck. They sent the pitch deck. We met at the office. We saw the financials. They ran us through the product and what it looks like. They answered all questions. They said simple yes and no's. And what they did not know, they said, oh, we don't know. We'll find out. Or, and whenever they said we'll find out, I actually said, hey, if you cannot find out, talk to me, I'll help you out. Mostly on conversion rates of marketing expenditure. That's where business have trouble. And after that, I gave him a chance to ask me any questions. I was like, all right, this is our timeline, this is how our process works. And in the meantime, I will be requiring further information from you at some point. And we might change your business plan a little. And they were like, yeah. And they did not talk about percentage. They did not go like, hey, we're only going to do this. For example, another example from the other side is I spoke to some company, and basically this was their first round of funding. And right after the pitch deck and everything, one day later, no hi, hello, I just get a message on my WhatsApp. We can do 25% equity. Right? When I look at the message, I'm like,
Yeah.
Okay, I'm already told that I'm restricted. The reason, it is sometimes if you have a lot of investors after you, yes, you can do that. But don't do it like, hey, we can do this. Say hi, hello first, speak to them, and explain why you do that, right? Well, someone else is already, offering us this. So, by the way, this rarely happens in Pakistan that you have too many investors after you, unless if you have a strong network. Even then, it's most of the time the investors will collaborate instead of. And by the way, that's another thing. If you do actually have a lot of investors, combine them. Do not be like, oh, I'm talking to this guy that and try to fight for you. And recent good examples of that, of course, Bazaar and Dastagir and also Airlift, right? You don't see one investor investing. You see a whole list of investors, right? They're not going about doing, this weird kind of politics. So these are, of course, great examples because they've done it.
For startup to think that they can get one VC pitted off another. There are only 10 VCs in Pakistan. They all know each other.
Exactly, yeah.
Do you think that you're going to successfully cause a rift between people who've known each other probably for 10 years in the industry?
Yep.
You're not going to succeed in that.
Oh yeah, and
what you end up doing is looking stupid in front of the VCs.
So a lot of time this happens where you're talking to someone and you're like, oh, by the way, have you heard of this business? And most likely someone asks, like, I got a pitch from them yesterday, and someone will be like, I don't know, I don't like those guys, because of this and that. Or, hey, they're speaking to us as well. So if you let others know that you have got someone else, they're also looking at you, most likely look at a collaborative effort. Because why do VCs tend to invest together? Is because most of the time, one of the VCs has already invested and the business has proven themselves. That's why that VC is now able to convince others, because the relative risk for the other VCs is now low. Because they have.
It mitigates risk overall.
Exactly, yeah. Exactly. And of course, raising big amounts with one VC is not too feasible unless you're going to Vision Fund, maybe.
KP or Sequoia.
Yeah, exactly.
But even they will probably ask for.
Exactly, yeah. Sequoia co-invests a lot. Um, but Bold doesn't. So you have to know, by the way, this is another thing. You have to know who you're speaking to. Look at their website. It will clearly say how they invest, where they invest, what their thesis is, right? A lot of, for example, our firm Bold, we do not co-invest because, like I mentioned last time, we're not VCs. We're in the technology space. We do sometimes buy businesses from VCs, but because our strategy is more of a holding company than a fund, it's our own corporate group's money, we have a different way of doing things. I know some VCs that also do not invest with anyone else, right? There are some angels and VCs, they will only invest when someone else is investing. So again, and by the way, if you cannot find that on their website, because a lot of investors I know, not here in Pakistan, but outside, they're least bothered with having a website. You would just see a landing page with their name on it and no buttons to click on, which is very common, especially in the UK and US. So over there, in your first meeting, ask them. So why? Because I don't know whether to call it ego or a fact about that professional environment. Because someone who is meeting many people, investing, they sometimes have this tendency to get offended when you say something against their process, right? And I mean, it's not necessarily a good thing, but this is true. So it's better to ask them first about how do they invest, and politely, hey, to understand better, can I understand? Can I know how? Yes, exactly. I mean, like, do you invest with others? Just ask them simply, instead of be like, hey, I have this investor. Why don't you invest together? Because if you do this directly, you are at risk of this one investor feeling as if you don't think I can invest by myself. That kind of thing.
There are egos in this business.
Oh, great ones. I mean, sometimes I also have it, to be very honest. I'm not gonna lie. But I think it's human nature because, in the end, it does, I mean, because you have to realize, even for people who are investing, right, it's even a more riskier business than startups. So a lot of times I go to these business schools and, some people are like, oh, we don't understand why investors take so much equity when the founders take all the risk. What people forget is how these resources are built, right? So there's a founder who's looking for money. Yes, they have a good proposition. They have worked really hard, but at the same time, the place where the money is coming from, those people have already worked hard, gotten them results, and now instead of investing in safe areas, they're giving a chance. So the opportunity cost they're taking of earning, well, in actual wealth management, we would call it this diminishing scales of return, because you're actually taking money that you can potentially put very safely for like 10-12% a year and going and investing where 90% chances are that you're going to lose the money. So I think that should clarify all that confusion about, oh, why do we give up? Because
so let's talk about that a little bit, right? So a lot of people are enamored with the idea of raising $1 million or $10 million or whatever it is, but there are consequences to the business as a result of that raise.
Yep.
One, yes, you get capital that you can then invest to grow your business, but what are some of the unintended consequences that founders are not aware of?
Oh.
Such as, the dilution of equity, for example.
Yeah. So first thing, I mean, you have to realize for your startup to be successful, no matter whether you take an exit by selling it or an IPO, I don't think you will end up with any more than 10-12% of equity towards the maturity side of the business. And the understanding that 51% gives you control is not very true. It might be true in the sense of company law, maybe, and how you can choose board seats. But you have to realize, the more resources you're gathering, the finances, the money you're raising, those people are not interested in running your business. They will need you to run the business. You can look at any of the founders, they don't own what we know as the majority shareholding. You know, a lot of people, they're like, oh, I'll give it to the VCs, I'll give it to, but in the end, I want to keep 51%. It's not going to happen like that. The other thing I would say, the other consequence that people are not prepared for is whenever you read about funding, people think the business is actually of that value now. That is perceived value. So when someone gives you money for an X amount, yes, you have a perceived value of $100 million. But to be able to realize that value, the business has to perform according to what was listed down in the business plan. And to do that, you need to report monthly. So so a founder's role at that point, they do not expect this, but a lot of it now ends down to answering to the investors and getting and hiring better people than themselves to raise to run different parts of the business, which I think is a hard transition for people, because they're like, and do not expect this. A lot of people sometimes come to me and say, hey, I want an investor who's like a sleeping partner. कुछ नहीं पूछेगा. VCs or some angels, they do that with safe notes, but even then they ask for reporting. But do not expect anyone to be your sleeping partner when you're a young business, right? Actually, ask them for more help if they're not helping you, besides money, because that's what matures. Because most of the time, these VC-funded businesses are first-time entrepreneurs. Not all of them, but a lot of them, and they need that kind of guidance. And if they're left with money and not knowing how to report, what to report, just to give you an example, sometimes people are motivated to report the wrong thing to keep raising money. We have had examples. What was that? Elizabeth Holmes, what was the business? The medical equipment business, right? They kept reporting the wrong thing, right? So a lot of people can tend to do that as well. So you have to know that, yes, you should be ready for losing equity. You should be up for changing your role. You have to now then become a businessman, representative of your employees, of your whole market, your product, your customer.
It's not just you.
Yeah. And at the same time, when you're expanding, by the way, a lot of people I see that they have a challenge with expanding their team. For example, they'll be like, oh, I can do this, this, and this. Why do I need a team? The whole purpose of you getting that money is to allocate it and allocate it to scaling your business, which sometimes means, letting go of what you love doing. For example, we recently hired an analyst, right? And I love meeting new businesses, but now I'm sadly not going to be doing a lot of that because now I have too much on my plate and I have to concentrate on developing those strategies. But so now I have to give up, the cool side of meeting all these startups and businesses and technology. I wouldn't say startups, technology businesses. So that is something. The dilution is something, of course, and reporting and understanding that money is not in your pocket.
Along with the reporting comes taxation.
Oh, yes. So a lot of, it's very common for startups to talk about EBITDA, right? We're always talking about,
Everyone stops at EBITDA for some reason.
yeah. And a lot of people don't even know what that means, by the way, EBITDA. And if you, okay, so moving a little to the, I would say the financial side of this, most of the big successful investors are not fans of EBITDA. There's a lot of criticism on how EBITDA is just a tool to, make or break valuation. So I find it all right. I don't think it's the best way to evaluate a business. I don't think it's misleading way, because if someone is evaluating and they know what EBITDA is, they can always ask the right questions. Yeah, this was actually something of a challenge with one of the businesses we were talking to, where their EBITDA was fine. The moment we got to taxation, the whole financial forecast basically was changed. Our perception of the business changed. Because it was a sales driven where there was sales tax and then corporation tax. And that was just hurting the business really badly. And the business was not ready to revise their pricing according to what we're saying. At the same time, by the way, not just future taxation, most investors, especially coming from outside of Pakistan, will ask you to prove your previous taxation records. We have a very strict policy in bold of investing only when businesses have been tax compliant, and if they haven't, they will actually show us the record of what taxes were owed and what they chose to pay by whatever means, right? So yeah, taxation. And I would also say this, once you get that funding, this is like added, I would say, advice for founders. There are two ways you're going to make money, right? One is your salary, which you get taxed on. But also when you're looking at that big chunk of exit that you sometimes dream of, in that also a lot of tax planning comes. So the richer you get, the better tax expert you should be yourself instead of relying on external advice. Because a lot of times, in my experience, you can get better. And also, by the way, yeah, if you get someone who's already working in taxes with people with a lot of money, that's another additional advice. But yeah, for businesses, do not ignore tax. It's okay to talk about EBITDA at first, but when no one's going to invest without knowing what taxes the business is going to be paying.
So just on that note, then let's talk about the ethics
Oh,
involved, right? So
yeah.
in Pakistan, there's this concept of black money.
Yeah.
Right? So you meet investors who are willing to give you a sack full of cash for a share of your business.
Mm.
And it seems tempting because it's free money, right? There are no strings attached to that money, or so you think. But then it is almost impossible for you to raise serious VC funding up.
Yeah.
Because the guy would look at you and say, where did this money come from? Where's the trail? So, and also talk about the founder ethics.
Yep.
Like, what is good founder behavior after they raise funding?
Mm. So, very sensitive area to talk about. So I have had the experience, by the way, where people have presented me with money. I wouldn't say who, where, when, what, but they go like, here's $2 million. And I'm like, all right, how much do you need back? They're like, oh, we need $2 million back. I'm like, what? Okay, just give it to us after 3 years, no profit, no interest.
It's basically money laundering.
Yeah, it's money laundering or black money or whatever it is. So there's a lot of money like that. There are a lot of people who used to give me advice because like, Rizwan, why are you working so hard to find investors? I'll introduce you to this guy. He has unlimited supply. Just, form a company in X country, do that. It's very easy to get access to that. It's very hard to then
Extricate yourself.
Yeah, do not get involved in circles. And by the way, so for example, I'll tell you this, not in Pakistan. So in Pakistan, even funds are not really under that scrutiny of telling people where the money is coming from, right? So we were speaking to a firm in the UK recently with our UK office. And right after they finish our meeting, right, we always get a call asking, where do you guys get your money from, right? What are some of the businesses you own? And they will actually look at some information. Like there's so many records, like in Pakistan, we can't really Google and see, if a business is legit. But that is a huge, huge thing in the developed world. So if by any chance you've gotten money that is not clean, that does not have a trail. So by the way, not just black, even if you have gray money, if all of a sudden you invested like even 1 crore into your business and you can't prove where that came from. Did you sell something? Did you make it? Did you save it? Did someone gift that money to you? All that is important. Now, that translates into founder ethics because that's the first step. If you're not doing that, that means you've got some ethical ground. Now, when it comes to after raising money, yeah, I mean, the key thing is, I would say, to remember that it's not your money, right?
It's an amount.
It's an amanat. It's something that you have to answer for. You are carrying way more responsibility than you were before. You are not this hot star. I find the some of the guys that I've seen in the market, I see them very grounded. They do not take credit for them being awesome, and they thank others that were part of the process. I think the founder of Baikia is very down to earth. He connects. He openly shares. He counts his I would say some privileges as well, because everyone has some privileges that has helped them raise money as well. But yeah, it's important to be grounded. It's important to know it's not your money. It's important to know that you're carrying more responsibility. And of course, the biggest thing is, do not try to lie on your reports. Do not try to lie in your marketing. There are big businesses that fail with that.
Don't lie at all. You can't build a business on lies.
Well, you can for some time.
But
you'll get caught. You'll get caught. Yeah, exactly.
One person will find.
Yep.
And everything will come tumbling down.
Another part of this is, I don't know if this is really truly ethics, but I think it is. Do not ask for the highest salary you can think of. And try to create a. Actually, the best way is to let your board decide how much you get paid. You can, of course, negotiate, but negotiate on the offer they give you. Because most of the investors, they try to be fair. And you have to know, as an ethical ground, when you're raising money, you have to have some sort of skin in the game. So the investors and you are working together.
And not.
Yeah, so basically, bold as a policy, we do not invest anywhere where the founder goes, you know what, first give me this much money. We're ready to invest in the business. You get nothing until you make something. And so actually, we were doing a review of our process and our global deals that have happened, right? So out of the 60 deals that Bold has done, we paid 2 founders upfront money, and those are the 2 deals that failed. So, I mean, that's some data there for you, that because the founder is basically then thinking, ye chale na chale, mere to paisa aa raha hai, mere to paisa aa raha hai. So that's why you have to be prepared for that, and I would say that is part of the ethics.
Just to reiterate, one of the things that Rizwan mentioned, and we kind of moved on from it, was taxation. Right?
Yeah.
So I know founders who evade taxes in Pakistan, and it's almost like a cultural thing where tax na bharna is a source of pride. He goes to God. मेरी इतनी रेवेन्यू थी, मैंने इतना टैक्स दिया, ये फखर की बात नहीं है।
Yeah.
ये आप कौम के साथ गद्दारी करें। There's no other polite way of saying it. You are defrauding the nation of what you owe them, and it causes so many issues.
Yeah.
When the person is sitting and they want to raise funds, let's say कि एक startup है जिसकी महीने की revenue is 7 million rupees, but he's declaring 500,000 rupees. How does he do financial statements? And when he sits in front of a VC, which set of numbers is he going to show him?
Yep.
Because he can only show him the 500,000 rupees. So what is he going to do? Tell him, actually, I'm making 7 million rupees and evading taxes on the rest? The VC is going to run so fast out of the room that he won't even know what happened.
Yep.
और रोड रनर की तरह भागेगा, एक धुआं होगा और जूम करके जाना, वो बंदा निकल जाएगा कि यार किन लोगों के साथ मैं फंस रहा हूँ, ये तो मुझे भी साथ साथ मरवा देंगे.
बिल्कुल.
So, my general advice to all startups, please pay your damn taxes.
Yep.
You can try and cut costs elsewhere. You can try and save money elsewhere, but pay the taxes that you've got. I'm not saying be stupid about it. Don't overpay.
plan your taxes, I would say. You know, there are many. There you can decrease your tax liability in legal ways.
By all means, leverage all of those ways.
Exactly.
But don't, if you can try and minimize your tax liability,
Exactly.
but don't try and evade your tax.
True.
Because that's a criminal offense in both legal and moral.
Yeah. So
ways.
I'll just to add to that, I basically worked with the Canadian Family Office before this. 4 years, we didn't do a single deal in Pakistan because of this problem. Wherever we went, there were two set of statements, and there was one deal I literally feel sad about it. I wish we had done that, but again, the whole point was, and look, the wo bhi chal raha tha aapka, it was a, where you could declare that you didn't pay, and amnesty scheme, yes. And we were like, all right, let's opt for that. And guys were like, oh no, we'll keep it this way.
Like really buzz up. It's a, like I said, it's a source of pride for them. Needed.
Yep. That's one of the one of the main problems for why investors are scared of investing in Pakistan as well, because then you have to realize investors are also filing taxes. We have to tax on our gains, on holdings, and on so many things. Yeah, on profits that go back. So,
I mean, a country of 220 million people has 3 million
taxpayers. Tax registered. I think payers are even less, I guess. Oh.
Don't even want to go down.
Okay.
It's 3%. It's 1.5%
Yeah.
of 3 million people.
Yeah.
Is 1.5% of the country pays the taxes of the whole nation.
Yeah.
And the rest of the country are freeloaders.
Mm-hmm.
I mean, it's incredible. How is the country run?
Yeah. Yeah.
Because no one wants to pay the tax. But look, I think
And also, let's get back to the first one we were talking about. Do not get defensive on this.
yeah,
Like the first point we were making. Even this.
it is what it is. All we can do is to make sure that we are as transparent as possible with
Yep.
our investors.
Exactly.
Put your cards on the table. Please don't hide anything. Because if you think that investors' DD will not be thorough, you're kidding yourself.
I even if they want to know what you're going to eat for breakfast for the whole amount of time they've invested in you, if they want to control them, let them.
Cornflakes and low-fat milk is breakfast.
And
Extra.
this is reminding me of another few examples. So again, with the family office, our chairman was quite aggressive with founders at first, to see if they are worth it. This is what he would do. He's like, all right, you want my money? Okay. He'll email you a book. He's like, read it. He'll email you a book. He'll like, read it and tell me what you understood from it. We only had like 1 or 2 people who actually read the book. So like again, that's where they were like, oh, क्या आप करेंगे book पढ़ के पैसे देने तो ऐसे दे दें, right?
Times I get it.
Yep. Another example. Sometimes what he would do is, right, he's like, I like your business, but if I give you money, you have to give me the right that I can extract blood from you whenever I want, right? This is not what the VCs would say, but this is a man talking about his own money. It's not his borrowed money. So, yeah, and trust me, if anyone would say this, the funding would happen. The due diligence would not matter because for families like this, I mean, I remember another statement, just to give you an understanding how it is for the other side, for the people who are looking out to give you money, right? Is I remember I was asked to write an NDA so powerful that if someone tries to lie to us, we have the right to go bury them in the middle of the desert. So, see, these are the fears that drive some investors away from you. When they ask you to do things, they are tested. You get tested. Very honestly, a lot of the times we delay answers just to see how. Yeah, because in the end, when your business fails, and if I get involved, I would be more responsible than you. I would be held more accountable. I would have increased the magnitude of the loss that was already happening, right? So that's why it's not easy. I mean, because of all the movies and the news, it sometimes seems like it's a very flashy sort of business we're in. But most of the time, I'm just sitting at my desk, looking at numbers
Crunching spreadsheets.
and praying to God that I don't make a mistake.
Okay, so just on that point then, what are the things you look for when you're reviewing financial statements?
Okay, so first and foremost, we like as much breakdown as possible, especially for the first year, right? We love top-down approaches where you let us know about how much money you're going to be spending and what results will that generate. So now this will be different for every investor. I'm telling you what I do. The first thing I look at whenever someone is showing me revenue, I'm like, okay, where's your marketing costs? Or how are you getting this business? And what is the associated cost? Which is very uncommon here. And a lot of people are like, how would I know? I don't have any history. You look at the market, you can just Google whatever mediums you're using. Ask someone who knows. Ask me. I'll help you with that, right? Second thing is, there has to be an assumption on every single thing you put up there.
So that it can be challenged and broken down.
Exactly. So for example, if you're saying you're going to get an electricity bill of this much, let us know that historically your average has been this, right? And then of course, we don't really concentrate on inflation and these kind of figures because, we're not looking at like 10 years down the road. It gets more important when it's a longer time period. We also look at I would say, a sense of completion. For example, I was giving an example where technology businesses will be like, oh, we're scaling up. But I look at 3 product revenues, but only 1 product manager. Or I don't see a product manager at all. All I see is technological people. So the thorough understanding of because that's a financial detail you cannot miss. Another thing, we sometimes do not see, like for example, if I look at a business, I don't see a separate retention budget, right? So you know what your acquisition cost is. I want to see how many businesses you're losing per month, actually, depending on
funnel actually.
Yeah. So how many new people? Okay, so I'll break this down as well as I can. Well, how I like seeing it, I don't like seeing revenue at the top. What I like seeing is how many your business is reaching, how many eyes is your business reaching out to every month or every quarter. Out of that, how many are converting into clients? Out of that, how many do you expect to lose next month? Out of that, how many do you how much money you're going to spend on retaining the person that you're going to retain? How much business, how frequent business are those businesses then going to give you? So do not go, if you're an accountant or a financial person, do not do the statutory required financial statements. This is something that is more, because see this over here, I can do sensitivity analysis. I can do, I can see what happens if your retention cost goes up or down. And as an investor, I can then be more comfortable in your reports. And if you do not know how to do that, and you're open about, so one of the businesses I spoke to, they didn't have that capability of doing this, right? So in the end, I said, all right, I'll sit down with you and we'll do it together. But these are the things that have to be there. So if anyone is interested in knowing more, there's one document analyzing startup tech companies on my LinkedIn, which has all these metrics and figures just collected all together. Oh yeah.
I think it's a great resource. So Rizwan's actually written a whole bunch of posts on different aspects of startup investing, entrepreneurship. Please do take the time to go and read them on his profile, because that kind of knowledge is not, I guess kind of what he's doing here as well. It's just sharing knowledge, sharing expertise. And it's a rare thing for someone to actually be willing to share this openly, with no agenda.
I think that is actually more structured, because over there I have like
you have time to think it through.
And I have actually written a complete book, by the way, which I just haven't really taken the time to formalize and go ahead with publishing. but at one point I probably will. And it's basically covers everything from starting small business to a startup, fundraising, and planning. So, that I think I wrote it actually 2, 3 years ago. I want to update it. Of course, I have more experience.
So if you need help with that, let me know.
I definitely will. Yeah, I definitely will. And my purpose, honestly, I'll tell you the reason I decided to write it is because, for example, I'm talking here, and most of the places that I was going to in Pakistan or being invited, I was repeating the same thing and I was looking at the same problems again and again.
Yeah.
So I was, I was living by myself. I didn't have a lot of family here or anything. So I was like, I need something to pass my time. So, inshallah, at some point, I'll probably have that book. And if I hope it can, the objective of the book was simple, that instead of paying someone can get access to this book and at least develop a business plan themselves, right? Because before that, I was having an idea of having a software that lets people develop their business plans. But the more I got into it, the more I realized that's the worst thing I can do, because business plans as templates, in my opinion, don't work. You can give a thinking framework, because if you give a template, the innovation then just basically dies out, right? So everyone will start using their business idea to match the template. But if a business idea is so unique, it deserves its own way of representation. So yeah, I think that's why I think in this process, guidelines and frameworks are much more important than, yes, do A, B, C, D, E, F, G.
Yeah. On that note, thank you very much for your time today, Rizwan.
Thank you for having me again.
Open the floor quickly for questions. Do you guys have any burning questions?
Earlier that you faced some private in the startup. I just want to know that, in my opinion, I believe the startups mainly are not very much aware of few things. So when I reach to someone, my expectation would be that maybe I am missing some part and he understands that I am a startup and he will solve it out for me rather than evaluate me that this guy is not doing the right thing. So obviously we are talking about the anything, we are talking about the initial investment, we don't know how to pitch in a better way. Maybe you find someone defensive. Actually the guy if this movie we see from his perspective, he wants to try that, okay, this is what I can solve it, and you investor or who is the VC support him to tell him that this is not the right way, instead of making out of it that this is not a good time.
So that's where the first communication with the VC or the investor is, that you let them know that this is what you've built and they're looking forward to advice, and then talk about investments. Because a lot of times when you're sharing information, like I said, the questions are for evaluation. But so let's say if I say, hey, do you know your acquisition cost, right? Instead of saying, well, we have an idea, but we have instead of giving a long round and round answer, you can just say, no, I'm actually looking for help to find that out. So,
Okay. So one thing is related about one case maybe it's support whenever case we started a specific thing and then we pivot because of pandemic and we do something. For example, we started with school transportation, then
Yep.
we started with the office commute, and meanwhile we identify the potential of picnic and party and people asking for home trip, using the leverage the same fleet and offering that as well within us. Similarly, we thought the technology is better now, we can offer them someone to the corporate who just want to use technology and we don't want to be the vendor for it.
right.
It becomes like four things now in the product. When it comes to define a business model, we have a very rational business model for the starting thing, basic model we have. But when it comes to the investor, we're confused whether to include all them together and pitch the deck, pitch them, or we just go with the one service, because we got the feedback from a VC that you have to be very specific that this is the single idea you're working on, and if you're doing so many things, VC get confused. At the same time, from our perspective, we believe that we are leveraging the same fleet. We thought the whole idea is a single idea. this is the confusing thing in our state. So, what
Yeah.
can you produce?
So if you have pivoted from a few things, the best way to approach is what you're doing now. The history you can tell them later, right? So if you have, it also depends on how much time you're getting. For example, I am like not every VC or VC representative or investor representative or investor is the same. For example, I am in the business of technology, so I understand. Sometimes I understand more than what you're saying, right? But if you have like maybe if my analyst was here, right, he or she would not be able to understand. They have shorter spans. So I think we covered this last time. It should be as simple as explaining to a 2-year-old, you know, and just focus on what you're doing now. So if you have pivoted, you can tell them that later. So let's say you tell me right now you're providing transport to corporations and schools, right? That's it. The rest of the story, when we meet again, that's where you're like, okay, so this is our history, this is our future, and yeah, so concentrate on the now, basically.
At which stage you guys more prefer to be onboarded with the corporate ventures?
Okay, so for us, we invest anywhere from 500,000 to $10 million, right? That's our ticket size. So if let's say there's a startup that we see that needs multiple rounds of funding but fits within 10 million, we might go in. But again, you know, like I said, if just as like a startup has to give it most of its equity by the end of that, so we basically negotiate on that level. So we would find any business that is actually in business, has around at least a 1 year of trading history. Trading history means selling something, right? Complete product, selling something, has clients, does not necessarily have to be profits. So yeah, that's basically the stage. So we're looking for anything that's making some sort of money, has a product, has been trading for more than a year.
My question is that if someone starting very early and he just developed his prototype, which investor should they go? VC or seed?
Angel investor. Angel investor. Do you know who that is?
Is the CEO?
Yeah, exactly. CEOs or people with money and who will understand. So because at the prototype stage, most of the time you just need. We are.
It's confusing the two of us. I'm a lowly paid government employee, भाई क्या बात करते हैं ये VC लोग हैं.
No, I'm not a VC. No.
नहीं मतलब
I mean-
लोग मतलब समझ रहे? There's an aura there.
Yes, but yeah, you know, people with good amount of savings in their account who are ready to take that risk. So prototype angel investment is the best one.
Also friends and family.
Friends and family, yes, yes. If your dad has money, first dad.
Allah maaf kare. All right, guys, listen, we have to wrap because we have a session. Can I just have the mic? I have a couple of announcements. So we're doing आपने corporate का पूछा. So we're actually doing corporate innovation matchmaking 3 weeks from now. So we're going to invite about 25 corporates here in this space, and we're going to connect them with 25 startups, and it'll be like speed dating.
Nice, yeah.
So you spend 3 minutes with one startup, and then the buzzer rings, and the startup moves to the next corporate, next one. And the idea is for corporates to understand what kind of stuff people are doing, and see perhaps where they might want to invest, perhaps where they might want to mentor or get involved, in some capacity, and for startups to see where their business model might actually help an existing company.
Yep.
And that becomes a client for them.
Right.
So that's one thing we're going to do. I think it's just been announced yesterday, actually. We're looking at it in the second week of September. 16th September, thank you. The second thing we're going to do is we're going to invite our startups to a mentoring and advisory session at the beach.
Oh, nice.
So we thought, we need to do this in a proper way, and so we're actually setting this up. Unfortunately, it's not entirely free, but it will be subsidized. There will be a fee to the startups, वरना तो आपको पता ही है,
Yeah.
पूरे खानदान को लेकर पहुंच जाएंगे लोग बिरयानी खाने के.
Oh, there will be biryani.
There will be biryani.
I am in.
Okay, so we have one sign up already for that. But no, that'll be, the idea there is to talk in a different environment.
Yeah.
To have a different setting. And we in Karachi, we're blessed to have an amazing beach. And you know, we don't leverage it. So that's the second event that we're doing, I think on the 10th of September is our target date. And then there was a third thing that I wanted to mention. But it has completely slipped my mind. What I would suggest is, if you have questions for Rizwan, there are multiple ways you can get them to him. One is you can message him on LinkedIn. The other is you can actually leave comments on this video, and we will make sure that they get to Rizwan and he addresses them whenever he can. So to the lady who approached me last night and asked for a very specific question on SaaS, please do ask that question on the video, and we'll get Rizwan to answer to the best of it. So thank you all very much. I hope you enjoyed this session. It was very useful, and I'm looking forward to welcoming Rizwan back.
Thank you very much, guys.